Hey guys, welcome to another video. In this video, I will discuss gross profit ratio. Gross profit is a figure which is calculated by deducting cost of sales from the sales figure. For example, if you spend £5 to buy a product and then you sell it for £10, your gross profit will be £5. This figure ignores the other expenses which may occur to run our business on daily basis. This figure can tell us the goodwill or the strength of a business in the market. So for example, a product which Tesco is selling for £10, it may be being sold by Marks and Spencer by £12. So the brand name actually helps businesses to charge more money and hence make more profit. The other thing is that this figure will be different in different sectors. So for example, if you're looking at Tesco, their gross profit will be less because they're selling fast moving consumer goods, grocery items where margins are small. However, if you talk about electric cars, for example, the margins are pretty significant. So it does tell us a lot about our business. How it is calculated, if you look at the formula of gross profit ratios, it uses both figures from the income statement or statement of profit or loss. So we take gross profit and we divide it by the sales figure, and then we multiply with 100%, and this gives us the percentage of gross profit from the total sales. The benefit of using gross profit ratio is that it gives us a figure of gross profit out of 100. So for example, if you compare the absolute numbers given in the income statement of two different companies, so let's take an example of Marks and Spencer's and Burberry. You can see that these are the ratios of the gross profit and the sales. However, if you look at the absolute numbers, it does not really make sense. However, when we solve the formula, it gives us the gross profit out of 100, and that makes things a lot more easier to compare and to understand. So you will get a figure out of 100. So if you made 100 worth of sales, our gross profit would be this much, rather than looking at the millions of figure of gross profit out of billions of figure of the sales. One thing which is important to understand is that gross profit figure is not given for the service industries, because there's no cost of sales as such. They don't really buy something to sell something. So you may not find a gross profit figure for an airliner or for another company in the service industry. For those companies, this ratio is not that relevant either. Gross profit ratio is gross profit divided by turnover. Both of these figures should be available in the income statement. Let's go to income statement now. So that's our income statement. So we are looking for gross profit figure, and it should be here, but it's not here, and that is the problem. Sometimes companies don't give GP figure in the income statement. Sometimes they give it in the notes. So I explain that I will discuss these things later. I'm explaining them now. Sometimes the figures which are not here on the financial statements, they are given in the notes. And I think in this case, the GP is given in the notes, and for that I'm going to have to look at note 2 and 3. So going to our note 2 and 3, page down, note 2. So I just saw note 2 here. This explains the revenues, how the revenues were generated, what were the different departments of Marks and Spencer, and so on. And note 3
actually gives a breakdown of our income statement. And here I can find the figure of gross profit. I will write it down, I will note it down to be used in the calculations. So that was one figure which I needed. The second figure was revenue, which is also, well, we already know that it's in the income statement, but we can use this figure too. So we got both the figures which we needed in our calculations. So now we can go back to our Excel. I'm looking for the gross profit, and the second figure is revenues. So gross profit was 4047.3, and the revenue was 10698.2, and 4087.8 divided by 10622. One thing, guys, I didn't do here was multiplying by 100%. Okay. Same needs to be done in the workings, multiply by 100%, and divide 2.2. So I'll do the same here, times 100%. Times 100%. Now I will solve it. 4047.3 divided by 7.83, and then 0.87.8 divided by 4.48. So we have calculated gross profit ratio for Marks and Spencer, and we can see that it's very stable. It's pretty much the same. If you calculate the percentage difference, it would be very small. 1.6%. So this is a negligible change. So we can say that certain things were pretty stable, and those certain things was cost of buying goods, relationship with suppliers, sales price, amount of sales, amount of total cost paid. So these things need to be stable for GP ratio to be stable. How the GP itself is 38% is quite a good gross profit ratio for it. So this means that if a company sells something for 100, their gross profit is 38 pounds. That is quite good. Not excellent. There are some companies doing 50-60% GP ratio, but it is still very good.
Thank you for watching this video, guys. I hope you like it, and if you do, please give it a thumb up and share it with your friends, and do subscribe to my channel where I release regular videos on accounting and finance subject. Thank you.